Okay, now we see the 2019 question paper of Rani Chennam University. This is a 5 marks question. From the following information, calculate cash from operation. Cash from operation. So 2018, 2019 details is given. 2018 is the opening balance. 2019 is the closing balance. Okay. P&L account credit balance is there. We have to adjust in the opening and closing. Sundry debtors 80,000, 1,04,000. Sundry debtor increase of 24,000. 80 to 1,04,000 means 24,000 increase is there. This 24,000 increase you have to take in the less heading. Less heading. Bills receivable 80,000, 48,000. Bills receivable decrease. So current asset decrease. Current asset decrease comes in the add heading. Prepaid expense. Prepaid expense is also current asset. Current asset. So it is increase. Increase in current asset comes in the less heading. Goodwill 80,000, 56,000. Goodwill decrease. I think it is 24,000 decrease. 24,000 decrease of goodwill is nothing but goodwill written off. Goodwill written off. So it comes in the addition, non-operating expense. Depreciation 1,28,000, 1,60,000. Good depreciation increased. So increase in the depreciation is depreciation charged in the current year. Depreciation charged in the current year. So I think it is 32,000. 32,000 is the depreciation, non-operating expense you have to take. Sundry creditor 80,000 to 1,20,000. Increase in creditor you have to take in the add heading. Okay. So first you calculate the fund from operation. Fund from operation. In the fund from operation, you add increase in current liability and decrease in current asset. And deduct increase in current asset, decrease in current liability. You see the main thing. You see the solution. Operating activity, closing balance of profit 2 lakh. Add non-operating expenses. Goodwill written off 80,000 to 56,000. That is 24,000 goodwill written off. Okay, difference. Depreciation charge. Difference is 32,000. Okay, these two are the expenses. Non-operating. You add these two, totally 2,56,000. Less non-operating and non-cash incomes. Here you take only the profit balance, opening balance. 1,60,000 you deduct. If you deduct 1,60,000, 96,000 is balance. 96,000 is the balance. In this item, this is called as 96,000 is called as operating profit. In the operating profit, you add increase in current liability and decrease in current asset. So regarding increase in current liability, creditor increased. That amount is 40,000. Then decrease in current asset is bills receivable. Bills receivable decreased. The difference is 32,000. Okay, you add these two items, 72,000. Take to the outer column and add in the outer column. Total is 1,68,000. Okay, 1,68,000. Then less increase in current asset, decrease in current liability. Less increase in current asset, decrease in current liability. Here debtors is the first item. Debtors decreased. Debtor amount decreased. That is 24,000. I forget to give 10 here. Okay, 24,000 decrease is there. Then prepaid expenses. You see this? Debtors 24,000 increase is there. Prepaid expenses 15,200, 12,200. Increase is 3,200. You add these two and take to outer column. In the outer column, you deduct it cash from operating activity. Cash inflow from operating activity is 1,40,800. 1,40,800 is the cash from operating activity. Okay, now you see the 15 marks question asked in the 2019 question paper of Rani Chennamma University. Prepare cash flow statement from the following given statements of assets and liabilities with additional information. Dividend paid, it is a financial activity. You have to take in the financial activity, and this is not related to operation, so it also comes in the operating activity. Land purchased, this is the investment activity. You have to take in the investment activity. Goodwill written off, non-operating. You take in the non-operating. Debenture paid off. Debenture paid off is a financial activity, outflow. Okay, like this you have to take these items. Along with this, you have to take consider the balance sheet items. You see the share capital 70,000, 74,000. 4,000 increase in the share capital is there. This is the inflow of cash related with financial activity. Reserve and surplus profit, you take in the operating activity and calculate operating activity cash flow. Then non-current liability, long-term borrowing 12,000, 6,000. Decrease is there, that is redemption. It is financial activity. Trade payable, operating activity. Increase, you have to take in the add heading. You have to take in the add heading. Tangible asset, 20,000, 30,000. 10,000 increase is there. 10,000 increase is investment activity, purchase is there. ಖರೀದಿ ಮಾಡಿರ್ತೀರಿ, ಅದಕ್ಕೆ ಏನ್ ಮಾಡ್ಬೇಕು ಇದನ್ನ outflow of cash, financial activity, investment activity. Tangible asset 10,000, 5,000 at goodwill written off. ಈಗ ಅಲ್ಲಿ ಹೇಳಿದವು. Inventories decrease is there, comes in the add. Trade receivable increase comes in less. Cash and cash equivalent comes at the last. Once again, you see the notes. 70,000, 74,000. 4,000 is inflow of cash from the financial activity. P&L account, you take in the second head, operating activity, opening, closing. Debenture written off, financial activity, outflow. This is outflow, first is inflow. Creditor increase, add. Land investment activity, outflow, 10,000 difference. Goodwill non-operating expense, written off 5,000 difference astator. Inventory stock decrease comes in addition. Debtors increase comes in less heading. Cash adjustment. Over, you see the solution. Cash flow statement 2019 question paper. First is operating activity. Closing balance of profit is 10,560. Okay. Add non-operating and non-cash expenses. Under that, first is dividend paid. Dividend paid in the problem is 3,500. Okay, 3,500. Next is goodwill written off. Goodwill written off is 5,000. Difference is nodal. You have to total is 19,060. Less non-operating income and non-operating non-cash items. Under that, only one item you take opening balance of P&L account, 10,040. 10,040 you deduct, 9,020 remains. In this 9,020 rupee, you add increase in current liability and decrease in current asset. Increase in current liability is creditor 1,480. Decrease in current asset is stock 6,500. you add these two, 7,980. Okay. If you take the total, 17,000 is the total. Less increase in current asset, decrease in current liability. Here only current asset adjustments are there. Debtors 2,700 decrease, increase. Only one is there. You deduct it. Cash inflow from operating activity is 14,300. 14,300 is cash inflow from operating activity. This is plus side. Now you see the financing activity. Increase in share capital is inflow. That is 4,000. Only one is there. Inflow is 4,000. Outflow means redemption of debenture. Redemption of debenture is 6,000. And one more is dividend paid on sales. Dividend paid is 3,500. These two items you deduct. Free and inventory dividend illi bandite. Illi financial activity ante tagondidini. Alli non-operating anta tagondidini. 9,500 you deduct. Your answer is minus 5,500. So this is cash outflow from financing activity. So you put minus for this. Minus sign outflow. Minus for that. You put minus there. 5,500 is financing activity net cash outflow. And third activity is investing activity. Here only one is there, purchase of land. Purchase of land is 10,000. If you purchase the land, cash goes. So it is a outflow. So you put minus. Outflow from investing activity. Cash outflow from investing activity is 10,000. Okay. So you take the total of the three of outer column. Minus 10,000 minus 5,500 minus 15,500. In minus 15,500, first item is plus, you adjust it. So your answer is minus 1,200. Minus 1,200 is net cash outflow. Net cash outflow. Net cash outflow. Okay. This is net cash outflow. Then you take the opening cash and cash equivalent, 9,000. Opening cash and cash equivalent is balance is 9,000. You add. If you add, you will get the closing cash and cash equivalent. Closing balance of cash and cash equivalent you will get. This is equal to closing balance. On the basis of this, you have to judge your solution is right or wrong.